Kia ora, everybody. A very warm welcome to FSC Connect on this Tuesday, the 5th of April. Great to be here and great to have you all joining us. A really large crowd joining in. A lot of people still joining. Richard Klipin is my name, and together with the FSC team, we've been running these FSC Connects really since the start of COVID, and it's been a fantastic way to connect us all together, hence the name, but it's actually translated into a really good way to educate, inform, bring opinions and voices, leaders from around the sector, around the world on particular topics of interest across our financial services sector. And really today has been very much about that discussion. And so with that in mind, we're in for a treat. The discussion today is really looking at the outlook for the life insurance sector here in New Zealand. But of course, we live in a global world. And so what happens in on our island happens in other places around the world. Interestingly, the FSC released its quarterly stats for the end of December, and what's become clear in the life and the health space is that the issues of risk and managing risk, illness, accident, trauma, COVID has led more and more Kiwis to think about managing that risk through various insurance products. So it's a really timely and topical conversation in terms of today's discussion. Folks, in terms of how we're going to run today, I'm going to invite Clare Bolingford in just a moment, who's Director at the FMA for Insurance and Banking, just to kind of address us and set the scene, if you will, from the FMA's perspective. I'm then delighted to be joined by Richard Taylor from AMS, David Chamberlain from MJW, and Mel Cantel from Fidelity Life to join with me and Clare for a broad discussion on some of the broader issues facing the sector. As with all of our events, it is recorded. It also is interactive. So for those of you who are new to Zoom, down the bottom of your Zoom screen, you've got a Q&A and chat button. Please feel free to ask us any questions. All of us on the panel can see them, and we'll try and use some of those as discussion starters as we head into today's session. And so with that in mind, let me acknowledge all of us here today, and let me acknowledge the panel as well. And with that, I'm going to warmly welcome Clare Bolingford to effectively give us a TED Talk. Clare's been a fantastic participant in many FSC conversations in her role, kind of leading the sector with a regulatory hat on. And I think today I'm really looking forward to her view on what the next 12, 24 months looks like from the insurance perspective. So kia ora, Clare, and a very warm welcome, and over to you.
Tēnā koe, Richard, and tēnā koutou katoa. I'd like to thank the FSC for the invitation to speak today and for the opportunity to take part in what I'm sure will be a very insightful panel discussion. I did have quite a hard time working out what to speak on today, mostly because there's just so much going on that could be covered. I know that the insurance industry is facing some testing times, and part of the challenge is the current volume of regulatory change. But we share the same goal of supporting customers' financial well-being, and I want to focus today on what we can do to put customers front and centre, both now and in the future. But before I turn to the New Zealand market, I thought I'd highlight just a couple of themes emerging in conduct regulation in other jurisdictions. In particular, a greater focus on the outcomes experienced by customers and investors. Some of you may have heard our new Chief Executive, Samantha, speaking a couple of weeks ago at the FSC on this topic, highlighting that governments and the public are now more likely to expect financial regulators to give greater emphasis to issues of equity and fairness. New Zealand isn't alone in experiencing significant shifts in market and customer behaviour, and at the FMA, we look to learn from best practice and lessons from other places. In November last year, ASIC's Commissioner Sean Hughes said, "At the heart of all ASIC's regulatory endeavours lies a resolute focus to ensure good customer outcomes." And the UK's FCA, a latest consultation on a new consumer duty, sets out clearly that firms should act to deliver good outcomes for retail clients. While the legal basis and some of the language differs, there's a strong consistency with the COFI principle of treating customers fairly. And importantly, the intention of shifting to a mindset focusing on customer outcomes rather than compliance with specific rules. So what does that actually mean, and for who? A good start is to exercise an empathetic focus on the customer. And this means viewing things from their perspective. So this can be during design and distribution planning and should be in any and all post-sale interactions. It means thinking about the customer experience throughout the life cycle of the product. It also means everyone in the business thinking like this, from the board and the executive through to frontline teams and everybody in between. It is categorically not just the job of the conduct team or the risk management team or the compliance team. I really can't emphasize this enough. And it means asking questions like, does the customer need this product? Am I helping them to make an informed decision? Do they understand what they are getting? As Samantha put it, it means people get the financial products and services they need when they need them, and they do what people reasonably expect them to do. Focusing on outcomes provides an opportunity to shape regulatory change in ways that work for both your business and your customers. But if you don't grasp that opportunity, governments do have a tendency to reach for more prescriptive tools. Because if the principles we expect firms to apply are clear, but there's no evidence of changing the practices that actually cause poor outcomes, eventually rules may be required to protect customers. And those generally have less flexibility and proportionality around how they need to be complied with. The FMA will be refreshing its previous conduct guide, which we published in 2017, to support a continued focus on delivering fair outcomes for customers and to set out our expectations around key conduct principles. It's important this is aligned with COFI legislation so that it does make sense for both our current and future licensed firms. So to the New Zealand insurance market, the health and economic environments are obviously having impacts both on insurance firms and on their customers. COVID-19 is now well and truly here, and in New Zealand, the impacts are being felt in the labour markets and in supply chains. Many people will be encountering financial stress over the coming year, with high inflation, rising interest rates, and the unknowns of long COVID. The trend towards further digitisation has continued to accelerate since the first lockdown 2 years ago, and there's significant consolidation occurring in the market, in particular with banks divesting their insurance businesses. The FMA and RBNZ continue to engage with the market regularly to understand these impacts and also to understand any risks from the Ukraine-Russia conflict. We need to hear what stresses and issues you have and are here to help with relief if it's needed. But this is a prime opportunity to demonstrate value to your client base and not use COVID-19 as an easy excuse to ignore client needs or to take focus away from good conduct practices. With all of these shifts, what we want to see is that changes are made with customers not only in mind, but at the forefront of firm strategies. I would like to congratulate the industry on the efforts it has made throughout the pandemic for customers. We've seen some really good practice from firms, particularly in the latest stages of this pandemic, where BCP plans are being formulated swiftly and rolled out to ensure that customer service remains a priority, despite staffing challenges. But we're also still finding, too often, that when we ask firms how they've considered customer impacts or outcomes when changes are made, the response has not been thought through, which suggests it's actually an afterthought. We do expect firms to be thinking about the customer up front when any changes are made, communicating clearly to customers, and importantly, thinking innovatively about how to mitigate any adverse impacts that the change could have. So, for example, when a firm states that a digitisation project would offer positive outcomes for customers, we're disappointed when they can't actually articulate to us what those are in practice. This is concerning, given we know some customers, particularly those in vulnerable circumstances, may struggle to access or use digital services. If thought isn't given at the start to how to support or what alternative services could be provided, this can often result in poor outcomes. It's not only important for senior leadership of firms to have customers at the top of their agenda, but also their boards. We want to see boards proactively thinking about what they need to understand and assure themselves that customers are treated fairly. We want to see them constructively challenging management on what information is provided to them on culture, conduct, and customer outcomes. The FMA is again teaming up with the RBNZ to review governance as part of our major cross-sector thematic this year, and we'll be looking to identify and promote effective board practices as well as areas for improvement. In the meantime, firms have been continuing to provide the FMA and the RBNZ with updates on their culture and conduct progress and action plans every 6 months. We can see that positive progress towards completing action plans has been made, with some firms having completed all actions. It's good to see the investment that's been given by the industry to tackle the issues raised in the original reviews and to build some good foundations for the future COFI regime. However, there is still more to be done. We continue to receive ongoing disclosures of client harm, such as overcharging of premiums or benefits not being applied correctly. Our message is still the same. When harm has occurred, make sure you put the client at the centre of your response, engage with us early, and stop any harm immediately. As I said earlier, I'm very aware that there's an intense level of regulatory reform impacting insurers and the wider industry, not only as part of the FMA's remit, but across government. I'd first like to say that we are firmly committed to improving the coordination between the Council of Financial Regulators, not only to understand the impact of these changes, but to identify where our work could be phased in a more achievable way. Some progress has been made here, but there is much more to be done. That's both on the timing of consultations, but also the operational impact of changes and ongoing regimes. I'm delighted that we've now established the COFA Insurance Forum with the FSC as a member to provide a space to have further debate on key topics and to support COFA in understanding the impact of change. I remain very grateful to the FSC for their continued constructive engagement and feedback as we work through these changes. So firstly, on the financial advice regime, we continue to receive a steady stream of full financial advice licence applications and are planning further guidance. I'm just going to make a quick plug here for the FMA crew working through these. If you are struggling with your full FAP application, please do reach out to the Financial Advice Supervision or Licensing team. They have held one-on-one sessions for Class 3 applicants and they are available to help. Secondly, on the climate-related disclosures regime, we're working closely with COFA colleagues and others involved in the regime implementation. We've set out the proposed approach timeframe on our website, and you can also find out how all of the climate change activities fit together in the RBNZ Climate Change Report published last year. But on to the current consultation on changes to insurance law. The policy intent here is again in line with the overall outcomes I mentioned earlier, to increase customer confidence, empowering them to access and buy the products that they need. It is to avoid situations where customers have gone to make a claim in a time of need and discovered they're not covered because they didn't understand, remember, or were even aware at the time of taking out the policy that they needed to make a particular disclosure, even if it's unrelated to the claim itself. We appreciate the reforms have the potential to create a lot of mahi for insurers, but have been heartened to see that many have already embarked on this journey. We've seen good examples of the introduction of plain English in communication and policy documents, which support customer understanding. It will be really important to retain this customer focus and think carefully about the likely types of customers and their needs and abilities when tailoring documents. Think holistically about how documents can help customers understand policy features and ask yourself questions like, have we tested customer understanding of our policies? And I mean with some actual customers, not just with lawyers or your own staff. What do current queries and complaints about terms tell us about how customers understand or don't understand policies? How do we identify customers who may have difficulty understanding a policy document and what support could be put in place for them? And even, are there new technologies we can use to aid and check customers' understanding? These will serve you better than spending a lot of time on internal policy tomes and box-ticking compliance exercises. And finally, to my favourite topic of regulatory change, COFI. Not that I'm allowed to have favourites, but I do feel that where the legislation is landing does provide a real opportunity for an improved focus on customer outcomes. As a reminder, insurers will need to comply with the principle to treat customers fairly. And while this isn't an enforceable duty, it will be implemented through the requirement to establish, maintain, and implement a fair conduct programme. The regime intends to cover the whole relationship with a customer rather than just focusing on the point of sale. So what does treating customers fairly look like in this regime? It means paying due regard to the customer's interests. So as I said earlier, putting the customer at the forefront of your strategy. It will mean firms will need to have a whole of company strategy about how they think about the customer. It means moving away from a legalistic approach to compliance with rules to a focus on good conduct risk management to deliver fair treatment. It means actually checking how products are performing for customers rather than assuming they work because it fits with a commercial strategy. It means communicating clearly and regularly with customers and acting quickly if something goes wrong. But how does that work when an insurance provider is not the only part of the customer experience? I'd like to finish by talking about the role and importance of intermediaries and our plans for providing guidance to support insurers and intermediaries to achieve good customer outcomes. I believe intermediaries are vitally important for giving customers access to financial products and services. Intermediated distribution channels exist to serve diverse market needs, and customers can get improved outcomes through great quality advice. But it's clear to us that the market dynamic between providers and intermediaries does not always facilitate fair treatment. And to achieve the right outcomes, it's important there's a sense of shared responsibility for the customer between a provider and any intermediary. Shared means both having the customer at the heart of their respective business, and they should work together as partners to ensure that customers are treated fairly. Shared does not mean compromising the commercially and legally independent relationship between providers and their intermediaries. We've already heard that some providers may have moved ahead of the final policy in a way that potentially overcomplies with what the legislation will say and could create unnecessary burdens for intermediaries and the providers themselves. For example, in the banking sector, we've heard that financial advisors are being told to undertake audits at a cost to the advisor. And as there's no standardisation as to the nature of the audits, firms may have to undertake several for different banks they partner with. And while audits may or may not be the right tool in this example, we absolutely want to avoid unintended and unnecessary consequences, especially if they add cost and burden to the industry without obvious benefit to the customer. As the final policy on intermediaries has taken some time to land, not least due to the valuable feedback provided and acted upon during the consultation stages, we're aware that the industry is keen for clarity on the obligations under the COFI bill. Guidance is likely to be helpful on the intersection of COFI and FAP licensed intermediaries and what the FMA expects in practice from all parties. So we intend to publish guidance to clarify expectations. But first, we want to collaborate with you in developing this to make sure it achieves the desired objective and doesn't create those unintended consequences. We plan to facilitate forums starting next month to get both providers and intermediaries around the table to arrive at an industry-led solution to how fair customer outcomes can be achieved within the bounds of commercial realities. So in conclusion, while there's a lot happening in the insurance sector, we have a real opportunity here to deliver regulation that's proportionate for the industry and supports you in delivering the overarching principle of treating customers fairly. We expect as the environment changes that you're focusing on the impact on customers and continuing to service and support them well. This will take good leadership from boards, executives, and those right across your business who bring the customer perspective into their work. It will take investment in systems and in your people. But with a relentless focus on the customer in everything you do, this industry will build confidence in its services, be sustainable, and continue to support the financial well-being of New Zealanders long into the future. And those are my opening thoughts. So I'd like to pass back to you now, Richard. Thank you.
Sure, thank you, Claire. That's awesome. And I invite the rest of our panelists to come online. And a warm welcome to Mel Cantell, CEO at Fidelity Life, and to David Chamberlain from MJW, and to Richard Taylor from AMS. And folks, we have a fantastic panel here. As I say, there's a Q&A button. There's already questions starting to come through. So folks, please feel free to contribute to the conversation, and we'll try and steer it in all ways possible. But Mel, I'm going to go to you first if I can. The topic of the day is the outlook for the financial services sector. Claire's obviously alluded to the fact that there's been a lot of change in the sector, a lot of M&A. What's your kind of take on the outlook as you head into 22, 23 and beyond?
Thanks, Richard, and kia ora koutou, everyone. Thank you for having me. When I was thinking about this topic, I was focusing on sustainability, which is a big topic for a number of reasons, but really trying to think about what would make this sector, life insurance, sustainable through not just the next 18, 24 months, but much further beyond that. And it's a pretty big question, but I thought, given it's just the opening comments, I'd try to give you a small answer. And for me, it gets packaged up under three things. So one is that we need to, and I'm going to steal Claire's words, be relentlessly committed to our customers. And by that, when I think about what do I mean by that, it's approaching what we do through our customers' eyes, not our own lens, not the lens of an industry that's been inwardly focused for probably a little bit too long, really challenging ourselves to look from the outside in, and then sticking with that and not just talking about it. The second thing I think is about being committed to change. Small changes are hard in any business. We are looking at large-scale, persistent, industry-wide transformation, and that's going to be a big job to do for anyone. But I think my view is we need to accept that it's needed. You can't keep turning up and doing the same thing and expecting a different outcome, and then accept that it takes effort. So this will be hard. And leading through change of this scale, whether you're a provider or a regulator or another participant in the industry, it's a heavy lift, and we're right in the midst of it right now. But we've got to rise to that challenge and make the effort. And then the third thing for me is about a commitment to collaboration. And when I think of what we do, there is an ecosystem of players in the life insurance game. Everyone from the providers, the intermediaries, the suppliers, and the regulators, the reinsurers, and if we are all turning up every day with the same focus around our customer and we can collaborate to drive that change rather than feeling like sometimes we're working against each other, then we're going to get through it a lot more unscathed than if we don't. So those are my three things that are top of mind when I think about the future.
Awesome. Thank you, Mel. We're going to come back to a few of those. David, you've kind of observed the sector now for a long time. What's your kind of take in terms of where we're at and outlook for the next couple of years?
When I think about sustainability, I think first and foremost about financial sustainability, because that's the key element. And so for that, I think about sustainable products, sustainable pricing. We don't want to have the issues that Australia's had around income protection. I think you have to think about sustainable distribution, and picking up some of the themes from Clare, that economics tells us that if we increase the regulation and reduce the number of advisors, then advisors are going to cost more. And so we have to think about how that works in an industry where we all accept that advice is a vital part of the process of getting someone to have some protection. So, yeah, the danger with increased regulation, you saw it with the triple CFA, everyone gets a bit nervous and things slow down because they're unsure. And so I think we have to be careful about doing that. But first and foremost, sustainable products and sustainable pricing, I think, is something that the industry needs to focus on.
Fantastic. Thank you, David. And Richard, last word to you. Your business spends a lot of time helping big companies, big life companies, kind of get their focus, their relentless focus on customer. What's your kind of take on the sustainability issues over the next couple of years?
I think it's an interesting one. Thank you, Richard. I see from a technology provider perspective that we can be part of the solution for insurance, but we can also be part of the problem, because technology needs to be there to support customer engagement. It needs to be there to support advisors, the business, the changing landscape around, I guess, the movement away from the kind of bank assurance model, as banks have a less influence in terms of the insurance space over time. The inclusion of digital channels, I think Claire mentioning digital being an interesting feature of the fact that whether the whole customer landscape can actually engage in digital conversations, be able to subscribe to digital in the insurance space, really kind of makes me think about those challenges where technology might, if implemented incorrectly, could end up actually causing more of a problem in the sector than solving problems. So it's a challenging landscape. There's lots of changes. M&A in the as you say in the sector is changing that landscape, and we need to be careful that we take the technology in the right direction that actually supports the customer and not actually disenfranchise the customer from that environment.
Great, thanks, Richard. Look, we'll come back to that kind of technology and customer piece. We've had a lot of conversation in the FSC about the rise of digital platforms and how it's really focused on a whole new generation who are getting financially competent and a bit more financially literate. Maybe they're taking a little bit more financial risk, although maybe they're actually testing and learning as they go. And we might kind of try and explore how insurtech and fintech can actually help with the insurance conversation. But I just thought perhaps as topic number one, just to explore a little bit further. I mean, and Mel, I might send this to you first and then to Claire. To what extent do you think the reg changes that are coming, whether it's the advice reg change or COFI, insurance law reform, perhaps NZIIS, what do you think? How do you think that's going to change the marketplace, do you think?
Sure. So I'll answer from two directions with a different time frame. So I would say medium to long term, any regulation that is focused on good customer outcomes is going to be a great thing. We are not the only regulated industry. It might feel like that when we're in the middle of it for the first time, but there are many regulated industries out there with the customer at the heart of those regulations, and they serve a great purpose and do exactly what they're there to do. I think it sets standards for participating in the industry, it drives the right behaviours, it prevents harm, and it builds trust. And that's a virtuous cycle for us as an industry and all participants and for our customers. So long term, it's a good thing. What we're feeling as an industry now is we are right in the short term thick of it. And my view would be there will never be a harder time than right now for us right across that ecosystem to be working within a relatively newly regulated environment, because it's being developed, it's being implemented, it's being absorbed, then it's being refined, and for whatever reason, luck of the draw, we are the leaders and the people in place right now who are tasked with bringing it to life, and we're all feeling the pressure of that. And when I say we're all, I mean everyone from the regulator to that whole ecosystem I spoke through before are the ones who are rising to that challenge I spoke about. It is challenging, but it will pass, would be my view. And we need to work our way through this. And if we work in that collaborative way that I was mentioning before and that I know Claire was talking about earlier as well, we can help sort of alleviate the burden and work through that together. That's got to be the focus for everyone, I think.
Thanks, Mel. Claire, do you see, when the FMA is rolling out regulation, to what extent have you kind of modelled out what outcomes do you think it'll play into sector? And if I pick up a couple of David's themes there, which is around sustainability of pricing, obviously, and sustainability of product. And in many ways, you want to have a robust and competitive marketplace on the one hand that's scalable and with lots of choice. I guess my question in my mind is, are we going through a consolidation phase before we get to an expansion phase, or are we kind of heading down to this? Actually, it's a scale game, particularly in the life insurance sector. And I wonder to what extent, I'm wondering what the FMA's view on that is, and kind of to what extent do you think this will play out?
Yeah, it's a great question, Richard. And I think, it's not something that we have a view on as a regulator. So we will regulate the market participants that come to the table, whether they're large, small, whether they're fintechs, insurtechs, whether they're your more standard, business model that we've seen before. So I think what we'll see though is that there will need to be, if we are going to move, if we have the eyes on the prize that Mel's been talking about, if we are going to move to a more customer-centred model of delivery in the insurance sector, that will mean a shift for some firms. And as I said, we are seeing some firms making that shift. And I think there are tools and support that can be given to the industry as a whole to make that happen. But I think what I see is that the organisations that are really taking those opportunities, taking advantage of what's happening in the marketplace, either from a market perspective, from a environmental perspective, from a regulatory perspective, are looking for the win-wins here. So they're looking at how do we win as a business, how do we make ourselves sustainable, but how do we win for our customers as well? And what I worry about are the organisations that are seeing some of the changes as a loss, as a threat, because that means that they won't necessarily be focused on that prize that we can get to at the end of this as an industry.
Because, of course, it is possible to win on all levels, right? I mean, the old model of shareholder trumps all stakeholders, is kind of out. There's got to be a way for everyone to benefit out of this, right?
Absolutely. And I think, we've seen in other jurisdictions, if you're solely focused on your commercial strategy, if you're solely focused on making money, and that can lead to poor outcomes for customers, that can lead, let's face it, to ripping people off. That is not a sustainable business model for the future. So really concentrating on those benefits to both the commercial strategy, to a sustainable business and to the customer, I think is the way forward.
Fantastic. David, your observations, you've been a long time commentator on these. What's your sense?
I think that competition is a key element in an efficient and rewarding marketplace. And so the consolidation is an interesting development. I think for good outcomes for customers, it's important that there's a product choice and that there's price discovery, what people are prepared to pay for the products, and that only comes about through effective competition. And I think that's one of the issues that unfortunately is not well thought through in the New Zealand income insurance scheme, that the lack of competition and price discovery, you end up with an arbitrary scheme that's probably not appropriate for most people. So, consolidation, hopefully that still sees effective competition, product choice and price discovery so that the participants respond to what customers want and will pay for.
Right, folks, there's some fantastic questions coming through. I'm just going to go Mel, I might start with you on this one and then go to Richard. This is a question from Phil. It kind of goes to the heart of consumer engagement and consumer literacy. What are your thoughts about consumer engagement? How do we get more consumers engaged in life and disability insurance discussion? Is our industry story too old, and is there an opportunity to get people focused on the protection gap? Interested in your thoughts, Mel, and then to Richard.
Yeah, it's a great question, and probably one that's perplexed many of us in the industry as we talk about moving to being genuinely customer-led, and then think about, well, where do we connect? Where are those touch points? And I find it personally really interesting. My background is consumer products, fast-moving supermarket shelf products that you eat and drink, and in that environment, you want your brand to be seen and touched and thought about daily. That's the goal, that's the expectation. I moved into general insurance and realised there was a customer touch point every 7 years, which is your average length of time between claims. And then I moved into life insurance, and it's a little bit longer than 7 years that you might go without ever having a need to reach out to your customer. So it is hard because we're not necessarily top of mind for people every day, nor do we really want to be. But that doesn't mean that you can't seek out relevant ways to introduce the right conversation, whether it's through education and learning at the point of consideration or kind of right through the life cycle. My view would be, I keep going back to the fact that none of us sit in this on our own. And if you think about the role we all play, and the different touch points that we all have, particularly when you start getting into the space with intermediaries who are probably more frequently in contact than some of the rest of us might be, how can we actually work together and leverage each other's contact points to create a consistent, meaningful, connected story? I don't think the life insurance story is old. I think the way we're telling it might be. Are we where people are? Are we telling the story where they expect to see things and hear things and learn things these days? We've probably got a bit of work to do around that, but again, for me, I just keep coming back to the more we can do together, the easier it's going to be to tackle some of those quite inherent challenges that we have.
Yeah, thanks, Mel. Richard?
It's interesting. Life insurance obviously is sustainable, or it's there to sustain people's financial security. To me, it's an interesting question in terms of how, why do people buy life insurance, or why do they buy income protection insurance? It's to kind of secure the future, and what is it that compels them to do it? It's about life events, whether you're buying a house, whether you've got a family member that's passed, whether there's a pandemic that's come along. And it's interesting, Richard, that the studies are showing that people are buying life insurance more than they have done for some time, and it's because there's compelling events around them that make that happen. The engagement of the sector, in terms of the age of life insurance has been around for a long time, but people are changing. Life insurance is about people, and I think the industry needs to find ways to touch people across many different parts of the of that kind of demographic of people. Obviously, the youth are coming through. They perhaps want more technology. They want more interesting ways to engage. And yet there are people obviously been around for a little bit longer, still need that support and that engagement. And so it's about listening to the customer and how the customer would want to be engaged with. There's not going to be one size that fits all. There's not going to be one compelling reason for people to want to buy insurance. And obviously that just makes the whole sector more challenged. It puts more challenges on that sector to be able to ensure they engage with people. Yeah,
because, for those of us who are kind of old enough, remember the business model was the collector agent, right? Where the agent lived on your street, came knocking on your door, was involved in your life, collected your premiums, and this is kind of to Mel's point around, how do you get the brand? How do you get the need top of mind? How do you build the customer at the centre? And Richard, to your point, that kind of life events conversation. Claire, I wonder if you got any observations on that about, how do we embed ourselves much more effectively in how New Zealanders live their lives, so the relevance is there and the needs haven't gone away. We're all still getting ill, having accidents, and sadly we're all going to die at some point. So yeah, interested in your thoughts on that.
Great, thanks, Richard. So yeah, I mean, from our perspective, I think it really is understanding more about those communities, understanding more about the demographics, and then building the services around what you glean from the insights that you gain. So I think, it's fantastic the work that the FSC has been doing to bring together more data on, what people really think about insurance, what are the views across, and doing research on that. So I really think that's the only way that the industry can consider what are the target markets that are out there, what do people really think about our products, what do people need them for, but also understanding more about those differences that there are, not, as Richard said, not thinking that there's some kind of one size fits all, either from a product, services, solution perspective, but also from a marketing and from an ongoing communications perspective as well. So it's trying to break that down and think there isn't just one way of doing things.
Yeah, awesome. David, not sure if you wanted to jump in on this one.
I read a book once about how retail could respond to web-based selling and how they could turn the tide, if you like. And one of the themes in that book was to make the retail experience more of an experience and an experiential thing, that people wanted to go in the shop to get the experience. And I think that that's something that the industry needs to think about. How do you make the purchase of life insurance a much more interesting experience, something that people will seek out and want to be involved in? And I think there's one player in the market who's trying to do that by taking life insurance out of just being life insurance, and there's rewards and other things involved in the whole experience of having a life insurance policy. So it's thinking about that, how do you engage with a customer into an experiential type relationship rather than just selling them a product?
Opens the door on two topics, which I'm just going to jump on now, and that's the kind of advice conversation. So if it used to be collector agents, the most powerful model, has been advisors engaging with customers, whether they're in offices or around the kitchen table or, increasingly now on digital platforms. It's a very personal connection. It's a very personal business. And there's a question come through around, the aging demographic of the advice community. I guess question to Mel, how do we keep the very personal value of advice? Claire mentioned the research we did is exactly that. More, consumers are much more confident when they get advice. They make better decisions. They have more cover. They get their claims affected really, really quickly because they have an advocate in the system for them. How do we bring the best of that into, what the new world kind of offers us?
So one thing we hear really clearly from our customers is the value of advice. So there is any future of the insurance industry and life insurance has 100% must have an advice model be part of it. It's so important. What we sell is complex, and even in its most simplified form, the ability to discuss with someone to really understand what you need. I don't know if there will ever be a one-stop shop digital solution for that. So the advice model is really important. I think we need to step back though and have a look at what are the demographics now and what do they need and how would they want to connect with an advice model, because it might be different to the way that it was happening before. And those life stage points of purchase, whether it be really critical things, buying a home, having your children, those moments that we know really matter from a life insurance consideration point of view, that the age is getting younger and younger. I think one of my team was sharing the other day that typical target demographic is now entirely millennial, which is quite a change, right? So how do we be agile and shift the way we provide advice? And I still mean person to person, but it's going to need to evolve as our customers evolve. And I don't think we should be afraid to acknowledge that and find a different way.
Yeah, great. Anyone else want to pick up on this particular topic?
I think it's interesting, Richard, you mentioned the kind of collection agent, because it's not that long ago I can remember that was how people bought general insurance as well. So it's not just about life insurance, which is maybe traditionally more advice-led, but even in the general insurance space, we've seen that people have transitioned from their local broker selling them car insurance to, I'll do this online myself now, and because it's a much more simple conversation, the risk is lower. People are quite comfortable to go and buy like vehicle insurance or health insurance or travel insurance in a way that they've not made that transition to this point in terms of life insurance, because obviously life insurance, much bigger risk, much more complex, as Mel says, often involves more difficult questions and a much better understanding about what those questions mean and what the impact would be of those questions on claims. So it is interesting how other areas of similar sectors have got to a point where digital will work. I agree with you, Melissa, in terms of the fact that it is about advice needs to be given, and life insurance, needs that support.
Thanks, Richard. Sorry, David, you were about to jump in.
It's probably a bit inappropriate, but traditionally, I'm talking about the very old days, and this experiential thing, the experience might have been that the broker took someone out for a round of golf when they had to have their policy renewal. And so that's the experiential thing that I'm talking about in the transactional world. And so we need to modernise that into something that relates to younger and more broadly in the market. So, but it's that whole experiential thing. I've had someone say he always enjoyed when he had to do his insurance renewal because the advisor laid it all on and he had a great day out on the golf course with a couple of other people. And so it's making that whole purchase an experience rather than just a purchase.
Because this kind of goes to the heart of kind of product development, right? So if the model previously or the model today is, advisors will find clients who kind of fit their ideal client portfolio, and every advisor has a slightly different business model. So you've got lots of different types out there. But, typically because we've been a life stage driven model, there's and people are getting married later, having kids later, etc. That need for insurance changes, and yet the same thing can be argued about investing. So I guess the question, and Claire, I might start with you and then go to Mel. How do we keep the customer at the centre when we've kind of got to develop product offers that appeal to people through their need stages, through their life? How do we retain the best of the life insurance sector, which is around helping people to make great decisions, and that's the whole advice conversation, and kind of how do we embed that as part of how we operate?
Yeah, well, I think the question of how people access insurance is really important because, as you say, through through many advice models, it can actually be quite difficult these days to access advice for people if they are, not that ideal client for an advisor. And I think, therefore, it's kind of back to the conversation we've just been having for me about how we think about not only how we engage with people in order to have those quality discussions and enable them to make those decisions, but also, it is about thinking, how can we do that within today's environment? So if I just think about, I don't know, my personal experience of this, let's say where it's still a fairly standard model for me. My insurance advisor comes around and talks me through at renewal time what I need to be thinking about. Even as someone who knows, quite a lot about this industry, I still have to remind myself of certain terms. I still have to ask, just remind me, can you, what does that actually mean for me? And what does it mean that how is this actually going to perform for me if certain things happen? So, the quality of that conversation is incredibly important, but also recognizing that people have quite short concentration spans, let's say. These days, people are used to accessing content in a very short, sharp fashion. So I really think, that there's probably more thought we need to give as an industry, as a sector, to how we do that engagement in a way that provides the access for people and also gives us information about what people want and what their needs actually are, rather than just assuming those needs, because that's what the needs of the previous generation were as well.
Yeah. Thanks, Claire. Mel?
I think there's two things about this. One is around how might we attract some new blood into the advisor businesses. It feels like a long time ago now. It was just before the last COVID lockdown, but I was out engaging with a number of advisors in the market, and I met these wonderful two women who were in their late 20s, two Māori women based in the South Island, and they had set up this business and they were targeting a demographic that was not getting focused from anywhere else, and they'd done a huge amount of work. They had realised that often it's the female in a household who's the shopper for these sorts of things. They're getting younger. They wanted to be connected with on social media. They were approaching the communication in a completely different way. It made me feel about 100 when they were talking about the way they were going to market, and they were doing so well. And what they were saying to me was, this is an industry with purpose, and that shift in importance of that generational focus on purpose at so many levels. What an industry to be part of. But we're not selling it to people to come and join us on that basis. So I think there's a real opportunity to bring different younger people in with a different way of operating to attract and retain customers in a way that hasn't been done before. The other thing I think is that we need to be more proactive as the insurer around product, and thinking about risk differently and protection differently. Times they are changing pretty fast, and what was risk that needed to be protected 10 years ago might have changed today, and it might be less of a risk, and there might be new risks that we don't typically think about, but proactive product development based on listening to customers and observing the environment, I think would go a long way.
Yeah, thanks, Mel. Two really instructive pieces and challenges for the future. I happened to get on a plane and travelled internationally for the first time last week, and of course, in New Zealand, travel cover, health cover. There's a moment when you're travelling now, which is, there's a real risk around COVID and so on, and there's a point of need, there's a point of sale, there's a point of engagement, and it's kind of folding that into how we live our lives. And I think there's a challenge there for all of us. Richard, I'm going to go to you on this one first, and just picking up David's point on sustainability, and that is, our sector is made up of businesses who are made up of businesses who are made up of businesses. So there's a very large collection of businesses sitting under the roof of some of our major players. And of course, that then provides systems challenges and product design challenges, pricing, sustainability. I mean, I wonder if you can observe, how do you deal with that? How do you unpack that? David, I might go to you next on that. And then Mel, you're obviously living that life as we speak. So I imagine you'll be able to shed some light on that as well. To you, Richard.
It's an interesting challenge in terms of organisations, certainly organisations that have grown through mergers and acquisitions. Life insurance companies are around for a long time, we know, many, many years, decades of service to their customers. And obviously, to your point, Mel, in terms of bringing new product to market, making sure that you're evolving the product set to meet the new needs. What that creates is a legacy across a business of products that made sense in each of those decades that you've served customers. And thankfully, people are around for a long time, and so they have a life insurance for a long time. And that creates a level of complexity within organisations, which obviously adds to the challenge of management, because you've got products that may have been created in the 1980s, the 1990s. Those products served their time now. People have still got those products and maintain them. And so when we're talking about being fair to the customer and engaging well with the customer, we obviously need to think about not only selling new product to the market, but obviously managing product and managing customers over the length of their tenure. And I think it's important for technology providers to make sure that they are cognizant of that as they're supporting the insurance businesses. It's a challenge at AMS we face. Our customers have been with us for a long time, and they have a wonderful eclectic mix of products that need managing, that need to be kept compliant, that you need to communicate to customers across these generations of products, which makes it into a very interesting challenge and interesting business. And when new requirements come through in terms of compliance, it's obviously organisations, insurance organisations, need to look with that lens across the whole product set, which I think the regulators need to be cognizant of that challenge as well, because it's not just about the latest and greatest and the shiny and the new. It's about that whole piece. And as a technology provider, we're excited by innovation. We want to bring innovation to market, but obviously we've got to do that in a very balanced way to ensure that we can take the whole sector on the journey.
Thanks, Richard. David?
I'd make two observations. The first is, I think Australia is looking at some legislation to perhaps enable people to manage legacy products more easily. And I think about that in terms of COVID. In the past, we've thought that to change anything, you could make no customer any worse off. Whereas in COVID, the standard seems to have become, if we can make the majority better off, it's okay to make some a wee bit worse off. So maybe that legislation can help us deal with legacy products around that test around no one worse off. And also looking forward, I think, perhaps life insurance policies being around for 50 years is an outdated concept, and the products need to be a bit more flexible, a bit more like a medical policy. I've seen a medical policy recently which had a clause in it that said you could be moved from an old product onto a new product. So maybe the products need to be a bit more flexible around allowing companies to keep things current and not have to worry about the development of legacy products. But yeah, and maybe a legislative solution to deal with some of the legacy issues is helpful as well.
Thanks, David. And Mel, yeah, how's your organisation managing this complexity?
I wish I could say it was easy, but I've never worked in an industry that was as hamstrung by legacy as ours, and you know, the legacy systems that permeate all of our businesses right throughout insurance and the broader financial services sector. It's like the enemy of innovation, but it is the reality of the world that we live in. My view is you have to find a way through. That way will be different for everyone depending on your circumstances, whether that's a completely new system implementation, whether that's finding ways to learn to live with legacy, whether that's taking an approach sort of along the lines of what David's talking about, which is actually how might you think about this differently? You know, we've always done it like this, but what if we could find a different way, and challenging kind of those industry norms and seeing if we can find a way through. I think if we allow ourselves to lean on legacy as a great excuse for not being able to be as customer focused or as fast paced or as agile or as innovative as we want to be, we're not going to go anywhere. I say that though, knowing right now there are dozens of people in my own organisation working their guts out to not only manage their way through our legacy systems, but the ones that we've just acquired from elsewhere, and then working out how to piece that all together. So it's a big lift, but I think it can't be the excuse. We have to find a different way. But the other thing I'm always really mindful of, which I'm sure Richard will be mindful of as well, is when you do put in a new core system, as we've been in the process of doing, you're actually just creating someone else's legacy. So there'll be a different group of people sitting around in 10 years' time cursing the system that we put in that we thought was wonderful, unless we work now to make it agile and dynamic, and don't sort of repeat those mistakes of the past and really be as nimble as we would want to set people up for in the future.
Thanks, Mel. Folks, there's lots of great questions. I'm just going to go to those in a moment, and I'll just read the questions just as a thought starter. But our last topic for discussion is really one to Clare. A lot of questions coming in around remuneration, which, of course, our model, our financial advice model and the model of life insurance obviously is all about remuneration, commission levels, servicing levels, and so on. Clare, you and I have spoken about this previously. I wondered whether you could just kind of paint the picture from the regulator's perspective around this topic of REM and how that kind of connects to keeping customers at the centre.
Yeah, sure. So in terms of remuneration, what we want to ensure is that there aren't conflicts of interest in the system that means that the customer is disadvantaged by that conflict. So what we want to see is a sustainable advice sector, a sustainable insurance sector, and that costs money. And we've seen from other jurisdictions that sometimes if you expect people to pay up front for advice, then they may not be willing to do that. So I think the conversation about remuneration is, how do we make sure that the customer is getting the right service, the right product, in a way that is affordable and accessible for them, and in a way that ensures that it's at the right price and that the industry as a whole is sustainable, which it needs to do if that product is going to perform for the customer. So what we're very keen to do is to ensure that we tread very carefully through any shifts that might need to be made in the inherent model that we have at the moment, because we don't want to break the whole thing too much, because that will mean that customers lose out ultimately. But what we do want to do is make sure it is fair, that pricing is fair, and that conflicts of interest are properly mitigated or removed where that's possible from the system, so that customers get the right products.
Thanks, Claire. Probably a whole webinar on that particular topic, but we won't go there right now because we're almost out of time. I just wanted to call out and thank you. Great question from Peter in relation to the role that reinsurers play, particularly around claims and claims management. Great question there. Thank you, Peter. Question here. This is from comes out anonymous, but it's in relation to the role of boards and their focus, helping management to focus on long-term objectives and management knowing that they've got time to embed change, and it's not just the quarter-to-quarter results, and particularly because life insurance happens to be a length of life average, I think is around 7 odd years that people hold a contract. So really good conversation there. Really good question on RISE and RISE of digital advice. How might this work in New Zealand? Again, topic for another day. Question here around life stage triggers, and obviously people are buying homes later, so maybe that initial point when people took out comprehensive insurance was when they bought their first house, but either if they're not or they're doing it later, how do we as a sector respond and challenge? Great question here, which is the essence of, in the end, insurance is about the human value or the value of a human life, the ability to earn an income. And when you take that away, how do you actually measure that? How do you manage that? And how do you actually have that conversation with New Zealanders? Because mortality is a really, really skilled topic area, which is why advisors are so valuable in this regard. And then last comment or observation here was just around, from time to time, press stories turn up. How do we get on the front foot? How do we actually advocate for the value of advice, the value of what insurance does, noting, the FSC data, about $1.2 to $1.3 billion of claims were paid in the last 12 months. I haven't seen that turn up on the front page of terribly many newspapers, but then that's up to us, right? That's our story to tell. It's about how we tell that well. And so, folks, I'm going to, we're almost out of time, just a one-line close from each of our panelists. I'm then going to invite Richard to thank the panelists. In 12 months' time, Mel, where do you think we're going to be on this journey?
Look, I hope that we're continuing to have the conversation. I think for me, that's the most important part, that this isn't a one-stop, let's have a chat, let's all move on and go back to our bases and keep that limit out. We're not going to resolve all the challenges in 12 months. The regulatory changes aren't going to be through. Legacy's not going to be gone. We've got a long journey, but I hope this will happen.
Thank you, Mel. David?
Where we'll be in 12 months' time, we'll be thinking about a fair conduct program, I imagine, and we'll probably be thinking about IFRS 17. So it'll be legislative change that will be occupying people's minds probably.
Thanks, David. Richard, 12 months' time.
I think we'll be working in partnership with the insurance companies that we support to make sure that they can manage the legislative challenges and continue to engage well with their customers.
Thank you, Richard. And Claire, we started with you. Last word to you.
Thanks very much. So, yeah, I'd like to see us in a year's time really generating some more creative and some more innovative thinking about how we can achieve the regulatory change that we're talking about, but in a way that isn't just about that tick box compliance approach, that is about that focus on the customer.
Brilliant. Thank you. Folks, these events we've been running for the last number of months, last couple of years actually, just as a service to the sector. We've just started taking on partners to produce these. So a big thank you to Richard and the team at AMS, and to thank the panel. Let me hand to one of the panelists, and that's back to you, Richard.
Thank you, Richard. Thanks to the FSC for putting on this excellent event. Thanks, Claire, for that introduction and the TED Talk in terms of regulation. I think that was some really good information passed through there. And thank you to David and to Melissa, panelists, for some really interesting insights. And thank you, obviously, for everyone tuning in.
Fantastic. Thank you, Richard. Folks, that's it for us today. Next week, we launch our research, second tranche of research for the year. just look out for the FSC Connect online and feel free to register. On that note, really appreciate you taking the time, joining us today, all your questions, all your engagement. This has been recorded, will be available on the FSC site probably later in the week or very early next. If you've got any ideas for either speakers or for topics, feel free to reach out. And for the rest of it, kia ora, have an awesome afternoon, and thanks for joining us today. Panelists, thank you so much. Bye for now.